So let's talk about 7 advanced overnight swing trading strategies that can help your trading become more profitable. The first one is to really understand volatility and what type of market you're currently in. Are you in a low volatility market or a high volatility market? And then to understand which of the trading strategies that you use are best for that market. For example, if you're in a high volatility market and you really don't know which direction the market might go, you might want to consider straddles or strangles. And if you're in an extremely low volatility market, you might want to consider some small directional trades. Next, between the directional trades and the neutral straddles and strangles are our hedged trades, such as the SPY TA or the SPY TQ or the SPY TB trade. These trades are designed to protect us. We're still going directional. However, if the mood of the market changes, we have the opportunity to minimize our losses or actually still gain. Third is always being on the lookout, considering what might happen next, meaning we buy our overnight trade at the close of the trading day, just before 4 o'clock. However, we're aware that there might be earnings reports. We're aware there might be economic reports the next morning. This information helps us understand how we're going to approach that trade. Are we going to be aggressive? What type of position size are we going to consider, considering what might happen overnight? As advanced overnight swing traders, we're not always looking one direction. In other words, buying stock at the close of the trading day and selling it in the morning. We're considering both directions. Will the market go up or down? So we'll either buy calls or puts or buy stocks or short stocks depending on our signals. Fifth is to review the different option contract opportunities before you buy. Rather than deciding you're just going to buy a contract with a 4-day expiration, take a look at the other contracts of 4, 7, or perhaps 10 days out. See what the premiums are. Perhaps you can gain a little bit more time for not much more money. However, that time will help diminish the amount of theta decay or time decay overnight. And sometimes just by reviewing those different contracts, you'll notice discrepancies or anomalies that you can take advantage of. And there's nothing wrong with comparing the premiums and expirations for different ETFs and stocks. Sometimes, once again, you can find a good opportunity just by taking a moment to look. And of course, having an indicator or a series of indicators that you trust is really important. Of course, we use the SPY Tomorrow indicator, but I use other indicators also, and you should too. Continuously test a combination of indicators to see which ones work best in different markets. And the number 7 thing that advanced overnight swing traders do is they review their trades. Not dwell on the bad trades, or even worse, try to fix bad trades, which is the one way you can definitely lose a lot more money. They review their trades. They take a look at what worked when they bought their options. They take a look at what they were doing before they sold their options. And they keep a log. They keep a journal of what is working and what is not during the different markets. What indicators were working best during high volatility? What indicators were working best during low volatility? And also making note of your mistakes. I make note of my mistakes, the things that I do wrong. Even when our indicator is correct and we end up losing money, why did that happen? Because it will happen. And so if we recognize the things that we're doing right and the things we're doing wrong, we will become an advanced and a much better and more profitable overnight swing trader. I'll see you in the next video.